Hey everybody, welcome to the morning market briefing. It's Thursday, March 26th, 2026. Hope you are doing well out there. We are going to get to the war in a few minutes. That's clearly the obvious news story, and what I thought would be interesting today is to jump into, these are just personal opinions. I wouldn't encourage anybody making investment decisions off of them, but I want to jump into just where are the off-ramps, what are the potential resolutions, what are the scenarios, and I want to talk a little bit about how I think that the market would react to that, because we're seeing a lot of market anticipation of things that frankly seem quite unrealistic from a probability standpoint. But no Tom Russell today. He is speaking at a conference. Benjamin Netanyahu is out at a conference as well. So running solo, so bear with me. This might be 5 minutes, it might be 30, who knows. But want to remind everybody, next Wednesday, April 1st, Jacob's Ladder event at the office, 12:30 p.m. Come by and get yourself a bite to eat and hang around and listen to Amy, the founder of that organization, talk about her story. It's really an inspiring story, not only of innovation and entrepreneurship and constant learning and evolution, both personally and professionally, but also a real story of impact. If you've not listened to that podcast, it is available on YouTube as well as anywhere you get your podcasts. So check that out. Make sure you like, subscribe, share it, all that good stuff. If you want more information on what the Jacob's Ladder Group is, check out the jacobsladdergroup.org. I will give a shout out to our listeners. The engagement from our listeners on this initiative has been nothing short of humbling. We're really fired up about how many people have listened to that podcast and felt really moved, and many of them have asked questions, gotten involved, donated, whatever it may be. We're not asking or telling you have to donate, but if you're so moved, I think that's an awesome thing to do, and it's a great organization here locally. This is the first of a number of these organizations that we want to highlight throughout the year, kind of these reverse sponsorships. So appreciate you guys for sticking with us. I know you're probably tired of hearing the announcement. The good news is after April 1st, we're either going to switch it up or maybe take a little break on those reverse ad reads. Right now, let's talk about the market, and then we'll get to the war. Futures are down about 1%. The reality, and we'll touch on this in a moment, but the reality is that we're kind of walking back some of the gains of yesterday as the probabilities have shifted, at least in the market size, not necessarily in mine, on what outcomes might be ahead for Iran. We did get initial jobless claims in just a moment ago. Pretty interesting here in that we've seen initial jobless claims come in right in line with expectation, which was 210,000. That was the expectation. Last week's reading was 205,000. We are seeing some relief on the continuing claims side. The expectation was for 1.85 million. We came in at about 1.82, which is a pretty sizable increase week over week. Significantly better, more than 300,000 better than what we got last week. So that's, 30,000 better. So that's improvement potentially, but I continue to think back to the chart that we referenced on the call maybe 10 days ago or so. I continue to think this may be a situation in which unemployment times are going longer and people are just giving up. The percentage of Americans who are employed, that number, if you remember the chart, just kind of goes to the right and down. It's plummeting, the percentage of Americans that are actually working, regardless of what the unemployment rate is or what these finer data points may say. I think there continues to be labor challenges. I think there continue to be employment challenges. So I think this perhaps is more telling of that trend than it is of, hey, new people found, 30,000 more people found a job than expected this week. I don't know that I necessarily buy that narrative. So just something to keep in mind of. We've talked about Jeffries some over the last couple weeks in different lights, but Jeffries has issued an apology for some of their challenges. They noted management is disappointed and takes full responsibility for the losses already recognized and that may be absorbed over time in respect of First Brands, all of which are manageable. I will say this, I appreciate the apology. I would say typically when large public institutions are issuing apologies, I tend to not classify those problems as, quote, manageable. Typically, if nothing else, there is a public relations crisis of confidence. When they're issuing a statement and they say, hey, it's really not a big deal, usually that's a problem. I think about this through the lens just as a dude, as a husband. When I actually do screw something up that is manageable, I tend to just kind of fix it. Usually when there's a sit-down formal apology given, to the wife, it's usually, hey, this is maybe beyond the degree of managing. So I think we need to get this out here, and I'm going to try to save a little face. So I think of that with Jefferies. Their stock's down about 1%. We did get some interesting data from H.B. Fuller. H.B. Fuller is on the manufacturing side of the economy. They're a specialty chemical company. They make adhesives, sealants, coatings, things like that, things that go into products that bond and protect materials. They're not a heavy parts supplier, but you'd see their stuff show up in packaging, certain elements of construction, hygiene products. If you think of the adhesive that you would find in diapers, that's kind of where H.B. Fuller plays. The stock's down about 1%, but interesting commentary. Looking ahead, they say the geopolitical instability in the Middle East adds significant complexity, disruption, and cost to global supply chains. H.B. Fuller is acting swiftly and decisively to ensure we are best positioned to maintain supply continuity for our customers. In addition, we recently announced a strategic pricing initiative to responsibly manage additional costs. They said this, and you think, okay, well, this seems like a challenge, and yet they raised their guidance. So at least in one instance, although the war is dominating the headlines, although the war is dominating our morning market briefings, it's about to take the majority of this call's time up today. There are companies that are finding ways to work around this. Previously, H.B. Fuller had guided for revenue to be up 0 to 2%. They're now saying mid-single digits. So did they quantify that specifically? Not necessarily, but call it 4 to 6%. They expect organic revenue to be up in the low single digits now. Previously, they expected it to be flat. They're higher on EBITDA and higher on their guide for EPS. So H.B. Fuller out there figuring things out, acting swiftly, and frankly, I think perhaps the operative word here is decisively. I think there are a lot of people out there, whether it's individuals, whether it's companies, whether it's any kind of structure you can think of. I think there's a lot of people that are out there trying to act swiftly. I think that was much of the market's reaction yesterday. But H.B. Fuller also putting a real premium on decisiveness. Hey, we've got to make sure that we're moving quick, but also that we're moving quick with real intentionality and real purpose. And if we can do that, the outcome is potentially better financial performance than some were expecting. So good to see that. Another good sign, I would say, overall for the manufacturing side of the economy, which certainly at this point seems to be accelerating. We will hear from a number of Fed speakers today. Lisa Cook, Stephen Moran, the Vice Chair of the Federal Reserve, Philip Jefferson, Michael Barr, all speaking this afternoon or evening. We'll have Tom back in the chair tomorrow. It'll be interesting to see if he has any major takeaways either from his conference or from the commentary offered from those on the Federal Reserve Board. But for the most part, I think we're kind of in a weird way, I don't love talking about war. I think it's very difficult. It's challenging. It's sad. I don't think people like the conflict. But I will say it is nice to not just be so focused on the Fed. I mean, there's certainly been periods over the last couple of years in which hearing from this many folks from the Federal Reserve Board would really mandate and dictate the performance of the day. So at least that's on the back burner for now, which is at least, if nothing else, as from one podcaster to the audience, that's a little bit of a change of pace, and I don't hate it. Update on the war. I want to talk about the war, what had developed over the last 24 hours, and I also want to talk about, just kind of in my personal opinion, where might this thing be headed, and if so, how might the market react? Yesterday, we saw a pretty strong market move, primarily driven by the hope and the optimism that there were negotiations taking place. Interestingly, there was a lot of skepticism about the negotiations, whether they were taking place, who they were taking place between, and what was going on. By all reporting, legitimate reporting, negotiations have been taking place. Iranian state-sanctioned media reported Wednesday that the regime had rejected a 15-point ceasefire offered by President Trump. We've got some sources from Pakistan that have kind of given the details specifically to the Associated Press on what those terms and conditions were. But I will tell you this, For those out there who even 24 hours ago were saying the United States is negotiating with the United States, they're not talking to anybody on the other side. They're not talking to anybody with real decision-making power. It is very difficult to reject a deal if you have not seen the deal. I don't know if you have ever declined a job offer, but to decline the job offer, you have to first receive one. This would be like me saying that young Jonathan Hicks has, rejected a marriage proposal from Sydney Sweeney. He hasn't received one. That would be an instance in which communications and negotiations are not going on. But young Jonathan Hicks has not gotten the chance to reject it yet, though he surely will when that opportunity comes. So clearly the conversations are taking place. And I think that needs to be noted because there's so much unknown about this war, but there are certainly signals and there's noise, and some of these signals are being completely ignored, I think, by really the media and frankly by pundits. Notably, the group that seemed most inclined to believe that these negotiations were not only taking place, but also very legitimate and likely to bring a resolution, those folks were market participants because we really saw a pretty strong rally in equities yesterday. And we're walking that back because now we're learning that these negotiations did take place and that Iran is saying no. Iran has countered with its own proposal. You do not counter a proposal that you have not seen. You do not counter a proposal if you are not in discussion. Iran, I mentioned yesterday that I thought the 15 terms that the U.S. was looking for was not necessarily a big win for the United States. Iran has issued a 5-point counter proposal, some of which I find absolutely laughable within the realm of probability. Not saying they shouldn't ask, but what are we doing, guys? Wake up. They want a complete halt to the U.S. and Israeli attacks and assassinations. I would note that if you think Iran is winning this war, that's probably not something you ask for. If you're playing, I'm going to piggyback big time on Tom's football analogy yesterday. If you're playing a team and they're passing the ball a lot and every pass is hitting the ground incomplete, you're not asking the other team to please stop passing the ball. But they want a complete halt of attacks and assassinations. They want a mechanism to prevent a reoccurrence of this war, which again is not something you do when you're in a winning position. Football analogy, back to it right away. If you beat a team consistently and you always play, I wish Georgia played Auburn every single week. Shout out to the Auburn super users out there. Georgia finds a way to win against Auburn pretty much every time. I'm not worried about playing them. I'm certainly, when the SEC is reconfiguring football schedules, no part of me as a Georgia fan is saying, please don't have Auburn on that list. I'm fine playing Auburn anytime, anywhere. This one is probably the most ridiculous. Iran wants war reparations. They want to be paid back for this war. This war is obviously costing the United States quite a bit of money, costing Israel a lot of money. But one thing that I find absolutely laughable is the thought that Iran's going to start getting checks in the mail and pallets of cash. It's just not happening. They want an end to hostilities against Hezbollah in Lebanon. And they want an end to hostilities against pro-Iranian militias in Iraq. So they're now negotiating essentially on part of their proxies in other countries. And they want international recognition of Iran's sovereignty over the Strait of Hormuz. I will tell you this, Iran, at least for this moment in time, you have that. You have that. There is no uncertainty about who is in charge of the Strait of Hormuz right now. If you think you can win this war and you think you are winning this war, and if you believe they are, that should not be a negotiating point. You should say, no, this is ours. We're proving it day by day, and here we are. Iranian Foreign Minister, I can't pronounce his name, but Abbas Araghchi noted that to the Iranian press that the White House had previously demanded unconditional surrender, adding that the fact that they are talking about negotiation now is exactly an admission of defeat. That falls on deaf ears when you are countering with equally ridiculous negotiating points. So I don't think that's the case. Really, when you think about any conflict, whether it's you getting in a bar fight or a war like this, there's really two outcomes. Complete annihilation of one of the fighters, or a negotiated settlement. That's it. I don't think either party necessarily wants the former. I don't think we're playing this for an annihilation game. So, of course, negotiation is being discussed. Caroline Leavitt warned, not necessarily speaking with inside information or sharing a lot, that if they walk away from the negotiating table, Trump will ensure they are hit harder than they have ever been hit before, which is frankly what you say. If you believe that the options are either complete annihilation or a negotiation, that's the correct stance to take. I'm not saying I'm supportive of that, but that's the stance that you kind of have to take. Axios is reporting that many people thought that Trump's push for peace was a ruse. And that's where I kind of get to these market reactions and what are the probabilistic outcomes of some of this. I don't know why so many people, we talked about this on the call yesterday, seemed so convinced that this was going to be a quick resolution, really occurring during this week and potentially today on Thursday, through kind of a sit-down, formalized peace negotiation. I don't know why people thought that. Frankly, I am more in the Iranian camp of this is probably a false flag and we're trying to throw people off the scent of what Trump is actually wanting to do. So I laid out here 5 scenarios, and I will tell you right now, these 5 scenarios are not incredibly thoroughly thought out. I can't. There are some scenarios in which I'm going to tell you what the outcome is, but I can't necessarily tell you how we're going to get there. But these are 5 scenarios that I see on the table and how I think the market would react. The first is the one that seems to have passed as of this moment, which is a quick ceasefire that is negotiated. I would have said this yesterday. I'm not just saying this after the fact, but the complete mistrust of both parties seemed to make that an insurmountable task, something that was never going to be achieved. Frankly, if this were to happen, the market reaction would be incredibly powerful. We saw it yesterday. We saw a big market move. We're reversing that now that people are realizing, hey, that seems like it's off the table. But if something were actually inked and the ink dried, I think the market reaction would be even stronger. That being said, I put the odds of this at less than 1%. I do not anticipate that at some point between now and let's call it Monday, I do not think we're getting on the call with an emergency podcast saying, hey, the war's over. The area that I keep coming back to is I continue to think there might be something big that happens with the Strait of Hormuz. I would put the odds of that at 15%. Notably, there's been plenty of news coming out of that, whether it's, non-adversarial ships being allowed to pass, whether we're talking about the tax that's being slapped, essentially the bribe to get ships through. We've talked about a lot of aspects of this. We've talked about the impact on the United States and how severe it may or may not be, but I continue to think that this is really at the crux of it, and I think that is underscored by the fact that Iran wants to make sure that they have control over it, and that's a negotiated point of their 5 points. They want to make sure that their sovereignty in the Strait of Hormuz is recognized. Notably, according to X and a number of posts on there this morning, the Revolutionary Guard Navy commander in charge of the Strait of Hormuz has been eliminated. He has been killed. I continue to think we may see escalation from the United States and Israel, specifically on the Strait. If that were to happen, I put the odds of that at somewhere in the 10 to 15% range. Let's call it 15 just so we add up to about 100. If that were to happen, I actually think we would see an initial oil spike given the volatility of the situation, and then I think we would see it come down quite quickly. I think that would accelerate any off-ramp you want to think of. I think it would really pour gas on the cooling of fire, which is counterintuitive, but I think it would accelerate that. And I think you would see in time as the market gained confidence in a resolution and realize that, hey, one of the talking points that Iran wants is completely off the board and we are trending more towards annihilation, they're going to come to the table a little bit more eager. I think as the market gained confidence in that, we'd see a nice market recovery. I'd put the odds at 20% that we really just see a legitimate ramp up in military activity. We know about the boots on the ground that are slated to come, I guess, tomorrow at this point. But I think this is the scenario in which the uncertainty really takes grip for people. I continue to anchor on the 5-week mark, which was kind of the tail end of the time frame that was initially laid out when this started. I think some people thought it would be a one-and-done attack. pretty quickly, the White House and Pete Hegseth and others were out saying, hey, this is 4 to 5 weeks. Well, we're coming up on the 4-week mark. We've got about 8 days till we're moving into, the end of week 5. I think the ramp up, if you are going to do it and you are going to stay mindful of that 5-week mark, or even give yourself some grace and say it's 6 or 7 weeks, I think any hope of this being resolved in a way that is decisive for the United States requires a ramp up, and requires a ramp up pretty soon. I'd put the odds of this at about 20%. I think that prolonged uncertainty, frankly, I think it pushes the market down. I think equities sell off. They may sell off a little bit more than they have so far. The challenge there is there would not necessarily be a clear-cut catalyst for the resolution of this war. I continue to think, and we reference this a lot, but Two-Way and Mark Halperin, their program, they're live every morning at 9 a.m. and 5 p.m. on YouTube. Search Two-Way. That's just the number 2. I'm heavily informed by his reporting and his knowledge. I continue to think that ultimately there is a plan that we have not understood, that has not been detailed, that is behind the scenes, that involves both the United States and Israel, and it is focused on regime change. I think there's a 30% chance that there may be a plan that is ultimately revealed, and when it comes out, hey, the United States actually got this done, for better or worse, what they set out to do, they did. We didn't know exactly what they were setting out to do. At this point in time, it still seems an awful lot, and Halperin did a great job of pointing this out. I'm not going to quote him verbatim, but at this point in the time, it seems like we have replaced bad actors, in our view, politically and otherwise, with junior bad actors. And I don't know how you could possibly say, hey, this is actually what we started off to do. If bad guy number 1 is gone, but the second generation of bad guy comes in and takes control, how do we feel like we've improved the safety of that region, the safety of the world? I think regime change, I would put it at 30%. I think the market response there might be a bit muted because I do think there's a number of people out there that just feel like, what's the point? Why are we in these wars? I will tell you that I think regime change could be layered on the top of any of these scenarios. I don't think it's a standalone thing. We could get there quickly. It could take a while. I think it's something to keep an eye on. I wouldn't expect a very strong market reaction to that, but I think in time it could be something that you are looking back at a year or 2 years down the road saying, hey, that was actually a very effective U.S. military option with geopolitical significance that was positive for the region. The last thing is I still think there's a very strong likelihood, and I would say that the 5-week mark is still very much in play on this. I think there's a 35% chance that the United States just walks away. They find components in which they say, okay, here are the points of victory. This is where we did real damage. We point to the leaders that have been taken out. We don't mention that their replacements are of the exact same ideological leaning. We talk about certain strategic initiatives. We talk about, hey, Hormuz is now accessible again, even though it was accessible before the war. I think there's a 35% chance of that happening. And I will tell you that the reaction from the market is going to be completely dependent on when that happens. If Trump were to come out Monday morning and just say, hey, here's all the things that we got done, this was great, this is victory, whether you believe that or not, if the operation ceased and it did not continue, I think the market would rally. If he does that in 6 months, I think there's going to be a lot of pain between now and then, and I don't think the market rallies on that. I think the longer this goes on, the ability to actually walk away and save face continues to diminish. I don't think we're at that point yet. I don't think we're at a point where we can't walk away and just say, hey, we're moving on. But as we continue to stretch this out, that's kind of my view. So those are the scenarios I'm kind of keeping an eye on. I continue to think there's an awful lot that we're not aware of on both sides. I'm sure there's things that the Iranians and higher up positions know that we don't as well. But it's an interesting development. I think there's going to be a lot of books written on this once it's all said and done. And I think we need to be patient. I think we need to continue to be paying attention to individual equities and opportunities presented there. I think, when you look at a company like H.B. Fuller saying, yeah, obviously we know that the war is going on, but here's what we're doing to address it. I take quite a bit of comfort in knowing that there's companies that are still putting their head down and operating. The 10-year, meanwhile, creeping close to a 4.4. We're at a 4.37. So something to continue to keep an eye on. We'll get Tom's thoughts on that when he's back in the saddle tomorrow. I'm going to wrap it up there. Hope you guys have a great day. Talk to you soon.